Yeah.
Thank you. Okay, I'm going to go ahead and get started. Welcome and thank you all for being here today. It's our pleasure to be here and help you understand your appraisal and classification notice that you recently received. How are your property taxes determined? We want to explain how we do it and how that relates to the bills that are going to show up in your mailbox this fall. We're here today to explain this process and answer any questions you might have. Our mission here at the Department of Revenue, under Director Beatty, is to be the most citizen-oriented, efficiently administered state tax agency. So everything that we do is through that lens. What I'd like to do is have you hold your questions until the end of the presentation, because my hope is that I'll answer a lot of them throughout the slides that we go through. Technical difficulties, all right. So my name is Paula Gilbert. I am the Appraisal Area Manager for the Yellowstone County Office of the Property Assessment Division. I've been with the department for about 15 years now. With me today, I have Liz Franz, who is our regional manager. She is, Region 3 covers the eastern side of the state that includes 26 of our counties. Liz has been with us for almost 25 years at this time. In addition, I have Marcy Schaefer, who was introduced previously if you were here. Marcy is the PVS manager for the Yellowstone County office and has been named the new treasurer. So we're excited to share her with you all. In addition, I have several of my appraisers here from our local office here in Billings. If you guys wouldn't mind waving. They are all set up and ready. If you have questions in addition to the presentation, or if you would like specifically to look at your property, they're here to help you. They can go through any of the forms that we have here, answer any questions that you might have. So they're available to you as well. So let's get started. This first slide is just a map of the state of Montana. And as you can see, the Property Assessment Division is divided into 4 regions. By color, we have that orange, the blue, the green, and the purple. You'll notice that, again, the Billings office in Yellowstone County is part of Region 3. You'll also notice the red diamonds that are located with different city names next to them. Those are the cities or towns that we have local offices that are currently open to the public. So as you can see, Yellowstone County, we have our Billings office. Just to the south of us, the Carbon County and Bighorn counties, you'll notice that there is that dark bolded line that encompasses both of those. What that means is that the Red Lodge office covers for both of those counties. And so there is no local office located in Bighorn. You're free to visit with them in Red Lodge for any information that you may need. In addition, the map lists the names of the regional managers as well as the area managers and contact information. This is all located on our website at mtrevenue.gov. So the Property Assessment Division, what do we actually do? We provide the classification and valuation for all properties throughout the state at 100% of market value as directed by the legislature, with the exception of agricultural and forest land, which are valued based on productivity and commodity prices. We also calculate the taxable value by multiplying the market value times the tax rate, which is set by your legislature, to arrive at the general property taxes that you owe. To arrive at your taxable value, excuse me. I'm a little bit under the weather, so work with me here. My voice is a little shaky, and so we'll get through this. What do we not do? We do not set budgets. We do not collect or bill for taxes. Your local taxing jurisdictions set the mill rates to cover their budgets, and other local government agencies calculate, bill, and collect the property taxes. So property taxes are an ad valorem tax. What that means is they are levied in proportion to the property value. Let's talk a little bit about this calculation again. In order to arrive at your taxable value, we take the assessed value of your property times the tax rate to arrive at that taxable value. That value then is multiplied by the mill levy to arrive at your general property tax that is owed. So again, multiple different legislative decisions govern these three components. The Department of Revenue, by statute, determines the assessed value, and we assess at 100% of market value. The legislature determines the tax rates and any exemptions that may apply. And the local governments determine the mill rates and any special fees and charges. Your mill rates fund things such as your cities, your counties, your schools, and your special assessments fund things such as your lighting districts, storm sewer, and street maintenance. So I've said we assess at 100% of market value. So what does that mean? Montana Code Annotated actually states in 15-8-111 that we are to set all values at 100% of market value, which means that is the value at which a property would change hands between a willing buyer and a willing seller, none under any compulsion to buy or sell, and both having reasonable knowledge of the relevant facts. Classification is another piece of the information on your appraisal and classification notice. Property is classified according to its use and characteristics as designated by the legislature. The different classes of property are taxed at different percentages of their market value. Currently in Montana, we have 16 different property tax classes, and each having different tax rates within them. In our office, we deal primarily with Class 3 and Class 4. Class 3 includes your agricultural and forest land, and the tax rate for that class is, the tax rate varies. For agricultural is set at 2.16, and the non-qualified agricultural land is set at 15.12%. We also deal with Class 4, which includes your residential and commercial properties, and the tax rate set for that is 1.35 for your residential properties and 1.89% for your commercial properties. These tax rates do, one second here. The tax rates can be adjusted if you qualify for things such as exemptions or the Property Tax Assistance Program, which is available. We do have flyers here, and we can talk to you about that as well after this meeting, or abatements that are granted from your county commissioners. So your local governments set your budgets and mill levies. Local taxing jurisdictions calculate the mill levies they need to meet their budget based on the taxable value that we supply to them, with certain limitations that we'll talk about in the next slide. So when we talk about a mill, 1 mill is equal to 1/10 of a cent. Easiest way to explain that is for every $1,000 of taxable value, 1 mill then would equal $1. So let's just run through a quick calculation. The state levies 95 school equalization mills, 6 university mills, and 1.5 mills in locations with technical or vocational schools. We obviously have that here in Yellowstone County, and so the state is levying 102.5 mills. So again, if we use our example of $1,000 of taxable value, we would owe $102.50 would be the tax liability just for those state mills. That's just to give you an idea again of how that calculation works. Next, I'm going to have Liz Franz talk to you about the restrictions that are set by legislature to the budgets.
Good morning. I would like to just have a little bit of a conversation about the local budgets and the mill levy restrictions. There's a misconception that when the taxable value of a property goes up substantially, that the local government gets a windfall. That is not the case. Local governments are restricted by legislature in Montana Code 1510-420, and they are not allowed to increase their budget any more than 1.5 of the average rate of inflation for the prior 3 years. Remember that if the jurisdiction doesn't levy the amount of mills in a given year, they can carry this over to a subsequent year. Total mills also include your voted on mill levies, school bond or public safety levies. These levies have been voted on by the public, so they are not restricted because they were approved by the voters. Special assessments and fees are set by the local government to pay for services in a specific area, such as fire districts, storm drains, sewer lighting districts, fire hydrants. Those are then added onto the local mills to be applied to the taxable value for the total tax bill. So an example of how the mill would float down, assuming half the average rate of inflation for the prior 3 years at 2.5%. If you look here, in 2022, the total taxable value of our district was $12,150, which means the value of a mill, move the decimal point 3 places to the left, the value of a mill is $12.15. If the local mills for this particular district are $500, then that means the total taxes assessed would be $6,075. In the 2023 year, the total taxable value has increased 50% to $18,225. That means the value of a mill has also increased to $18.25. That means that you would take the $6,075 from the previous assessed value, add the 2.5% for the 3 years of inflation at the half rate, and you would come up with $6,226.88. That's the maximum amount that can be levied in this district. If you divide that by the value of the mill of $18.25, that means the maximum mill levy for this district would be $341.67. So the mill levy for this district between 22 and 23 has reduced by about 31.5% from the previous year. Now I got lost.
Did you want to talk about the state mills or not?
No, go ahead and go on. So in a real world example, if you have a property that was worth $225,000 and in 2022 and in 2023 it is worth $300,000, that means it has increased by $75,000 or 33%. If you take the taxable value of this property, the 2022 taxable value was $3,038. 2023 is $4,050. So the total taxable value has increased by 33% to $1,013. If you take it times your local mills from 2022 and add your state mills, you get a total taxes of $1,825.54. In 2023, the total taxes with the reduced mill levy of $341.67, you have a total tax value of $1,792.81. This is a reduction of actually $32.72. So this particular property actually went down in value by close to 2%. If you have an increase, the second property shows an increase in value of 50%, and that equated to a total taxes of 10% more than it was in 2022. And the final value, the final property shows a value increase of 60%. you only have an increase of 17, roughly 18% in taxes. So even though the property increased 50 to 60%, that was only an increase of 10% and 17% in your taxes. So the point that we're trying to make is that the county doesn't just get to have a windfall. They're required to reduce their mill levy, which, as you can see, reduces your total taxes. Is that the last one?
Thank you, Liz. All right, so that is the important thing that we just want you to remember, is that your tax liability does not increase at the same rate as your property value. So just keep that in mind. So we get this question a lot. Where do my property tax dollars go? This graph is a representation of just that information. It comes from the department's biennial report, which again is located on our website at mtrevenue.gov. These figures are statewide and can vary slightly by county, but this gives you a general idea of where those dollars go. So as you can see, the majority of your tax dollars go to fund your local schools. Next is the county. The county goes towards things such as your public health, your public safety, museums, bridges, etc. There's a litany of things that goes towards. Next then would be the state. Keep in mind that the state mills all go back to the schools as well. So truly, that should be in with the school. That's where all that money goes towards, is back to your schools as well. And then we have fire and miscellaneous, your countywide schools, cities and towns. So the next thing that I'd like to do, and the last time that I did this presentation, me trying to switch to the internet didn't work so well, so we're just going to talk about it. If you go to our website, again, mtrevenue.gov, and you click on property, this is the website that you're actually going to see. There is a ton of information out here for the public. If you look down in this that orange box, you see a link that says learn more about your property's classification and appraisal notice. If you click into there, it's going to give you a lot of the same information that we're talking about today, in addition to this explanation of your assessment notice. So everybody should have received their assessment notice by now. So let's talk about what you're actually looking at when you open yours up. Number one, you'll see our class codes is what we call them. So we have a class code in this example. This property is a residential or city lot. In addition, we have a separate class code to talk about the improvements on that lot. Those direct the tax rate. This is a residential property. Again, the tax rate for residential properties is 1.35%. Row number 2 is giving you totals. So let's walk through that. That first total is just the size of the lot in question. So in this case, it's 1/4 acre. Then we have prior appraisal cycle value, as well as prior year assessed value. So let me try and explain this a little bit. It's a little bit confusing. In Montana, we have 2-year tax cycles, which means that every 2 years, we set values on all properties across the state. That value remains for both of the years of that tax cycle, so long as nothing changes with the property. You know, if you take down a pole building, if you add an addition to your house, that value can change mid-tax cycle, but without any changes, the value remains for 2 years. So in this example, what we're looking at is the prior appraisal cycle value. This would have been this property's value in 2021. Now in 2022, they obviously did something, made some change. Did they add something? Did they, build an addition? Did they finish their basement? Not sure what happened here, but you'll see that the value did increase for 2022 then. The next column over is the current assessed value, and that's really what we're talking about today, is where your value is coming in at for this tax cycle. Next to that is going to be your taxable values. Remember that taxable value is calculated using your assessed value times that tax rate. So in this case, the prior taxable value is taking that 333,040 times the tax rate, 1.35%, to arrive at the prior taxable value. This cycle, our value is 413,700. So again, we take that value times the tax rate to arrive at the current taxable value. Number 7 is what we call a geocode. It's a locational code to describe your property. Each property throughout the state has a unique code. Number 8, this is important information. This is last year's mill levy. We do not have mills set for this year yet, and they won't be set until probably October is when they're released. So what we have done here is, in a typical market, we would say, well, here was last year's mill levy. You know, we've seen a slight increase in values, so here's the estimate of what you're going to owe in taxes. It's not really working so well this year because it's kind of panicking people. And I understand that. When you look at that number of what your property taxes are going to be based on that mill levy, it's concerning. Keep in mind, that's last year's mill levy. And as Liz talked about, because values went up, our taxable value, that base, also increased, which in theory then, the mills should float down to account for that. Okay? So keep in mind that is not an accurate estimate of what your taxes should be. All right, so if I switched to our web page again, which I will not do, further down, and let me just show you here, there's a box right below that link that we clicked called Find Property Information. It's that orange box on the left. If you click on that, it will bring you to this page. This page is going to give you all of the information that we have on your property. You can search by the owner's name, you can search by address, tax code, geocode. There's multiple ways of finding information. Once you type that in, you're going to again see all the information that we have. You're going to see the land information, the land value we've assigned to your property. You're going to find all of the characteristics that we have on your property record, which again is really important that your characteristics are correct because that's what we're basing your value on. We'll talk about that a little bit more when we get into that valuation model. But I really encourage everyone to go to this website. We want to make sure that our property record cards are correct. So if you find an error, please let us know. We're happy to work with you on that. So let's talk about the valuation process. First of all, let's talk dates. By statute, we assess property as it sits on January 1st of any given year. That means that if you start building your house on January 2nd, it will not be taxed for the current year. If you tear down your pole building on December 31st, it will not be taxed for that following tax year. The property is assessed as it sits on January 1st of each year. This also includes land splits. So if you file a land split after the 1st, it will be the land will be split and it will be approved for property tax purposes for the following year. Okay. All property in Montana was valued as of January 1st, 2022 for the current tax cycle. This is where it gets a little bit confusing. So, according to Montana Code Annotated 15-7-111, the date that we are to assess all properties is January 1st of 22. What that means is that we collected sales, we collected cost information, we collected income and expense information to build models with a cutoff date of January 1st of 22. Using those models and that information, we then applied a value to each of the properties for the 23 and 24 tax years. It's a little bit confusing, I know. The only caveat to that is that we do change property ownership information is changed up until the time of billing. And that's so that if you purchase a property after January 1st, you're still going to be the one that gets your assessment notice, your property tax bill, etc. We have 3 approaches to value that we use to value all of the properties. The sales comparison approach is what we rely on heavily for our residential properties. We're able to build very statistically sound models with the large number of sales that we've received over the last few years. We then adjust the property that's sold to the subject property to account for any differences and calculate a value. The income approach is used for our commercial properties. We use income rents and expenses to, again, create models to put a value on commercial properties. The other one is cost. Cost is used for unique properties that we basically look at what it would cost to replace the property less any depreciation. So let's talk about each one individually. The cost approach. So every 2 years, the department builds cost tables using nationally recognized valuation manuals, such as Marshall & Swift, MS Means, along those lines. And then we make adjustments for our state and our local regions. The cost method is a required method in some cases, such as for homes that are not finished, they're still a percent complete. Properties that include agricultural or forest land, remember those are not given a market value. Those values are based on productivity and commodity prices. So we use the cost method to value those. Industrial properties, very unique. We really usually use the cost method on all industrial properties. So in order to arrive at the cost final value, we take the replacement cost new of all of the improvements. We apply a depreciation. Again, those depreciation tables are updated each tax cycle. And in some cases, we add multipliers to replacement cost new less depreciation. We then add the land value in to arrive at the market value. Sometimes we apply those multipliers because there are cases where we compare our sales prices with our cost values to make sure that they're coming in line with each other. And so if it could be a positive increase, if there are cases where our cost value is coming in less than what sales are showing the market value to be, there may be a positive increase or a positive multiplier for that, for those cost tables. There could also be a negative. So if our cost values are coming in and our sales are showing that that's not what the market is doing, then we would adjust those downward as well. The next approach is the most common approach that we use. Again, this is used it's the preferred method for all of the residential properties. It's much like what a fee appraiser does. A fee appraiser finds properties that are comparable to yours, adjusts for the differences, and uses those to determine what they feel your house is worth. The department basically does the same thing. Montana is a non-disclosure state, which means that sales prices are held in confidentiality. So when a property sells, a realty transfer certificate is required to be provided with the deed when it's filed with the clerk and recorder's office. This form gives the department the ownership information as well as the sales information. And again, the sales information is kept confidential. We then use this sales information to create models for land valuation and a sales comparison approach to value. We first verify that the sale meets the definition of market value. Again, it was offered on the open market, willing buyer, willing seller, and neither being under any compulsion to buy or sell. We also want to verify the characteristics of that sale. This is why we show up at your property to review your property record at times. If you purchase a property, we send a sales verification form. Again, we want to know what's included in that sales price. We want to know the number of bathrooms, the number of bedrooms. Is the basement finished? Did somebody leave their antique car in the garage because they didn't want to move it and that's affecting the sales price. We want to know exactly what's going into that purchase price. In the end, 3 to 5 comparable sales are statistically selected for each of the properties based on how comparable they are, and adjustments are made to account for those differences in characteristics. If you're interested in learning more about this, please feel free to come and visit with us after the meeting. And if you'd like to look at the comparable sales used to value your residential property, again, come and sit down with one of our appraisers and we'd be happy to go through that with you. The final approach is the income approach. The department mails income and expense forms to commercial property owners who self-report. Again, by statute, this information is kept confidential. We're looking for the income and expense for the operation of just the property itself. We're capitalizing the property's net income into a present worth of market value based on future income streams of the property. We're not looking for the business income. We are not valuing what is going on inside the building. What we are looking at is what could the building be rented for and what are the associated expenses. Multiple models then are built based on that data that we've received and separated into urban and rural models. We then use this information to build income models based on 8 primary commercial building types that include apartments, hotel, motel, retail, office, restaurant, mini warehouse, and mobile home parks. We're limited to those 8 simply because we're limited to the information that we receive from those mailings. We then estimate the market value by determining a net operating income for the property and apply that property type's cap rate to determine the present worth or market value of the future income stream of the property. So quality of appraisal. We get a lot of people, we've heard a lot, there's no way that my property increased this much from last year. So again, remember that we are talking about 2-year tax cycles. This value is as of if your house sold on January 1st of 2022, look at your value. Do you think that you could have sold it for that amount? If you don't, right? We know that the market just went nuts. We've never seen anything like this, certainly not in Yellowstone County. But the first thing that I really ask you to do, again, make sure that our information is correct, because if it's not, we can't put a proper valuation on your property. After that, take a look at that value. And if you believe that, we've lost our minds and it couldn't possibly have been worth that, come and talk to us. We're very happy to sit down, explain the process to you, show you your comparables, and answer any questions that you might have. So we like to know how well we did. And so the Montana meets and adheres to IAAO standards. IAAO stands for the International Association of Appraisal and Assessment Officers. This is an international organization that puts together training and materials and standards on mass appraisal widely adopted by taxing jurisdictions worldwide. Each reappraisal cycle, we like to evaluate our work and make sure that we are meeting the standards that IAAO has set. So let's look to see what happened this cycle. Sales ratio studies are what we use in order to determine how accurate our values are. So the way that we do this is we evaluate the accuracy of the assessed value by taking each property that's sold within 6 months of that general assessment date. General assessment date, January 1st of 2022. So we're using sales that occurred between July 1st, 21 through June 30th of 22. We take the time-adjusted sales price and divide it then by the assessed value that we've placed on the property to arrive at a ratio. So if we look at the example here, this property, we have a time-adjusted sales price of $440,000. It was assessed for $450,000. By taking that assessed value divided by the sales price, we get 1.02, which means that the assessed value is about 2% higher than that sales price. So here's the results statewide of how these sales ratios came out. Using 17,250 verified residential sales within 6 months of that general assessment date, we are coming in at 97.42%. Commercial properties statewide, we use 1,602 valid sales. Again, our ratio is coming in at 96.35%. The IAAO standard is 90 to 110%, so we are well within the limits of their standards. And basically, both of these being a little bit less than 1 means that we're slightly undervaluing properties, and there is probably still appreciation in these markets. So let's talk about some important things to remember. Dates. We've talked about go to our website, verify your characteristics, make sure that everything is correct. If you don't agree with your value, what I'd love for you to do is to call the office and speak to the appraiser in your area first. Let's make sure that you understand the process and how we came to the final decision on that value, and then we can go from there. We are more than happy to work with our taxpayers on the local level, just in our office. And I say that just because it makes things a whole lot easier. We like to educate the public, and you taxpayers are paying our salaries, so we work for you. We are here to answer questions, to help you in any way that we can, and to guide you. If you feel that your value is not correct, we're going to help you down that process of filing that AB 26 form. So the AB 26 form is an informal review. This form must be filed in our office, postmarked, email delivered to our office 30 days after the date on your assessment notice. Most people's assessment notices are dated June 30th. That means that you have until July 31st, if you disagree with our value, to file this form. If you file it by July 31st, we are able to take a look at that, and if changes need to be made, it will apply to tax year 2023 as well as tax year 2024. If you miss that deadline, you then have until June 1st of 2024 to apply. However, it will only be effective for the 2024 tax year. So again, call our office. We all have business cards here. We're happy to help you. We don't want you to miss that date if you truly are concerned about that value. The way that the system works then is you file your form, we receive it in our office. We have, we're a little bit busy right now, as you can imagine, but within a couple weeks, an appraiser will reach out to you, give you a call on the phone, talk to you about any questions that you have, and set up a date that they can come and review the property. You don't have to be there. We're not going inside unless there's, unless you have major settling issues that you really want us to take a look at. What we do is appraise from the outside. We measure properties, any kind of buildings, structures, we measure from the outside. So we don't have to go in, and you don't have to be there. But again, if you're more comfortable being there for the review and we can talk to you again then, certainly we'll set up a time to do that. Once we've done the review, then we make any necessary changes and we'll send you the determination letter, which basically says, here's what we've done. We've either made a change, we haven't. If we made the change, here's what it did, and here's the change in your taxable value then. Excuse me. If you receive that letter and say, still not happy, I still think that that value is inappropriate, your next step then is to go to the County Tax Appeal Board, which is a 3-panel board that actually sits right here in this room. And it's very informal. You shouldn't be afraid of this. We show up, I will be here, an appraiser will be here, and then you'll sit on this side and you'll just explain to the board why you think our value is inappropriate. Again, we'll help you in these situations. We're not your adversary. We're here to just make sure that we're doing a good job. We want to be fair and consistent with all of our taxpayers. Again, after that decision is made, you then have the opportunity to go to the Montana Tax Appeal Board, which is a little bit more formal. If we get to that point, we'll of course have discussions with you as well. Again, we like to try and handle all of this at the local level. We're here to help. So let's talk about a few of the questions that we receive a lot so that I can answer those first. Are my taxes going up? Again, I don't have an answer for you. I wish that I did, but unfortunately I don't. Mills are not set until October. And so until those mills are set, I can't tell you what that general tax is going to be. Keep in mind, though, taxable value is increased. Mills should, in theory, float down. That's the best I can give you at this time. We talk about improvements. So when I gave you the example of the assessment notice or your appraisal notice, we talk about improvements. Improvements are not, we don't mean that you improved your property. You didn't do anything to change your property. Improvements is just a term that we use to describe all of the structures on your property other than your vacant land. So an improvement is a shed, it's your garage, it's your house, it's your open porch, your deck, things like that. So we get a lot of questions about that. I haven't improved my house and yet my value went up 30%. It's just the market appreciation likely in those cases. So again, that's just a term that we use to describe all the structures on the property. Why did my value go up more than my neighbor's? We get this a lot. My value went up 40% and the guy next to me went up 32%. Keep in mind that we have created these models and we have assigned values to each of the characteristics. We assign values to your square footage, number of bedrooms, number of bathrooms, very, very specific to your individual property. And so the likelihood of your value increasing at the same rate of your neighbor, pretty unlikely, to be honest. What's really important is that you're taking a look at your value and deciding, is that an appropriate value that they've placed on my property? Make sure that your property characteristics are correct. Okay. You're trespassing on my property. According to Montana Code Annotated 15-7-139, we actually can be on your property, even if there's a no trespassing sign. Now, we're not out to make anybody mad or to make anybody feel uncomfortable. What we're there to do is just our job. So we want to make sure that our information is correct, again. However, we can come out to your property. We come unannounced. I've got about 15 appraisers in my office for about 80,000 parcels in Yellowstone County. There's no way we can set appointments up with every single person. However, if you feel really strongly that you would prefer that we give you a call before we show up, we have forms here. We can add that little note to your record, and we'll happily give you a call before we come out and take a look around. Again, when we're there, we're not going into any of your buildings. We don't want to go into your buildings. We don't want to be in your house for our own safety as well. We're just measuring structures from the outside. And the next one is, are you valuing my home as if it were located in a high-growth city? And the answer is no, a hard no. Our models are put together using, in Yellowstone County, we are fortunate enough, we have so many sales that we have created models for Yellowstone County and broken them down into very specific areas of the county. So we have models for the south side, we have models for Lockwood, we've got models for the East Heights, the West Heights, areas of the West End, townhomes, condos, separate models, and the list goes on and on. So I had somebody at the last meeting who said, gosh, I live on the West End, and, it's taking off out there, and I've got apartment buildings going in around me, duplexes going in around me. It must be hard for you guys to try and figure this out. It's not, because those are classed separately. So apartment buildings are commercial property. Duplexes are multifamily. When we're creating our models, we're using residential sales, sales that sold of homes right in your area. He actually lived in Black Rock subdivision, which is a pretty darn nice subdivision. We're using properties that sold right in that area to compare with his home to arrive at that value. We've even been so fortunate here in Yellowstone County, we've got separate models for Gregory Hills. We've got a separate model for Ironwood because Ironwood homes sell for a lot different than they do in the East Heights. So we're very, very careful about what sales we're using as comparables for your value. So now let's talk about something good. Let's talk about the tax rebates that the legislature and governor have signed. The first one is the income tax rebate. There is nothing that you need to do for this tax rebate. You can get up to $1,250 per person, or if you filed your income taxes jointly, up to $2,500. All you need to do is sit back and wait for that check to arrive. The department is using your 2021 income tax filing and sending out these rebate checks based on what you paid in 21 again. There are some restrictions based on the residency for the past or for the previous years. Again, we've got flyers giving you more information on that. We're happy to talk to you about that. I also have an income tax auditor here, Tyler, that's more than happy to give you additional information on that. That one, I actually received mine. It was direct deposited into my account the other day. I did nothing. So that was a welcome little benefit that I received. There's also a website you can check on the status. So again, if you have questions about that, let us know. The second one is the property tax rebate. This one is a little bit different, and you do need to apply for this rebate. It will open up August 15th. What that means is if you go to our website or come to your local office, we're happy to help you with this, but you apply for this rebate. It allows for up to $675 that you've previously paid in on your property taxes to be refunded to you. It's for 2 years. Again, the application process starts August 15th. Please work with us. We're happy to assist you in getting that rebate as well. So at this time, I'll take questions if you guys have them, and then I'm going to leave this map up there as well if you need any kind of contact information. We're happy to give that to you. Does anybody have any questions that I can hopefully answer for you right now? Yes.
So we all know January 1, 2022 was really, really high.
Yes.
Have you worked long enough in this department to see ever if they go down?
So in my 15 years in Yellowstone County, we're pretty steady. We've not been affected. You know, in 2008, the market crashed. Bozeman, disastrous for Bozeman property values. Yellowstone County, we just kind of float along, and we're really not as affected as a lot of the rest of the state. So values in Yellowstone, I have not seen them go down. Again, just because we kind of steadily increase. This time, we saw a huge increase.
Yeah.
Luckily, we're not Bozeman. We're not Missoula. We're not, you know, some of those other counties that have seen steeper increases than what we've even seen. But, yeah, so. Yes? Hi.
I have 3 pieces of property that are connected.
Okay.
And my question is, like 4 acres of it has the buildings on it, the house, and the rest of it is just undone. I mean, it's just land.
Right.
Okay. Is that land taxed at the residential rate, or is that land taxed at an agricultural rate?
So there's a lot of qualifications for the agricultural. If it's less than 20 acres, it's tract land, which means it's taxed at the 1.35%.
Okay.
Yep.
I'm just at 20 acres.
You're just at 20 acres? Just below 20?
Yeah,
19.9?
19.75 or something.
Okay. Talk to us afterwards. Let's talk about that a little bit. You need to buy somebody's little piece. We'll get you into that non-qualified tax value. Or excuse me, non-qualified land value. Sherry, did you have a question?
I've had some questions from taxpayers saying, have all the assessment notices gone out? They'll say, I got for one of my properties, but not for the rest of them. So I didn't know if they were.
We've had a really strange year this year. The assessments, for the most part, have all gone out. Now, I sent one yesterday because it's a long story. I was waiting on ag information on it. So, I mean, there's a couple of stragglers out there that are just being sent still. We've had an unusually high return this year, and I have no idea what's going on with that. But the number of assessments that we've received back in the office is huge, very unusual. Not sure what's going on with that, but it's very, very easy for us to print a copy and stick that in the mail. So they just need to call us, and we're happy to do that. You bet. Yes?
Did you speak to the school levies, like you did with the county levy, how that works? Does it float down as well, and how does that work?
For the state or for the local?
I realize they're different, so
And-
maybe both.
And the local abides, and correct me if I'm wrong, but I believe the local schools have to abide by that same restriction set in statute. Am I correct with that? Do you commissioners?
I am not positive.
Okay,
Local government does,
Right.
commissioners do have to do one half the rate of inflation over the 3-year local average.
right,
I can't tell you if the schools do it.
okay,
Sherry maybe
Okay.
would know that.
Well, it depends on the levy. There are permissive levies and then non-permissive levies. Probably be best to talk to the school, but, yes, there are restrictions on what, there's so many different, elements that go into that budgeting process of, like you said, the state's portion, the local portion, and, they cannot, go beyond a certain percentage before it has to go to the voters. So there are restrictions, but they're the exact same restrictions as this, local, that may be different, but you can probably get some pretty good detailed information if you contacted like the district clerk or business manager or OPI knows, but that's right.
Anybody else? Yes, hello.
I should know this, but I don't.
Okay,
So when you're doing it kind of goes to the question that you just asked. So when you're saying this jurisdiction, I'm thinking you're thinking the county because we're a county.
I missed part of that. Say, would you start over? I apologize, I missed part of what you said.
Okay, so when you're saying in this jurisdiction,
Uh-huh,
are you talking the county or the city plus the county plus the schools plus mosquito districts, any taxing jurisdiction within the county combined?
E-
And the second part of that would be, so I live in the county. I'm not in Laurel and I'm not in Billings. So all I would pay is the county assessment plus my high school. Is that correct?
yes. Marcy, do you want to speak to that a little bit?
Actually, you would pay your elementary and your high school and your county and any special fees that they may have. There might be an irrigation district, a drain district, or a fire district. That would be a special assessment in addition to the general tax.
And Marcia, wouldn't they pay the state tax too?
The state taxes, yeah, that's included in all parcels,
Okay, well, state taxes is 95 mils plus.
102.5
102,
total
right.
Well, 95 mils,
for
which goes to general fund, then comes back out.
schools, right?
And then the rest of it, the universities,
And the vocational schools.
vocational schools
Right.
are very dedicated.
But that's automatically included in every mill within the county.
So then each one, in my case, which would be, we have fire district, we have elementary, we have high school, and we have county. Each of those can go up 50% based on the last 3 years rolling average inflation.
The special districts can't. Those are special. I don't know how to explain it, but they are voted on by the local boards. They need to increase their rates, and approved by their local board. So fire districts have a board, they would, determine their rates every year. Same with the irrigation and the drain districts, which usually have to go through a court order to increase theirs. So those are just the specials. Those, yes, those can fluctuate. Those aren't dependent on a percentage, I don't believe. They're set by their board for that district.
Okay, last one, I promise. So when somebody comes in to protest, as I understand what you said, you're gonna explain the process to them, and we'll talk about their house.
Yep.
Can they protest the 5 or 6 comparables you chose, where they think that perhaps that is slanted or weighted towards the tax increase?
No. The owners can come in and certainly protest that value, but you protest for the property that you own specifically. Yes?
To clarify his question, you can't protest that was an inappropriate comparable?
Oh, absolutely you can. My understanding, and maybe I misunderstood him, my understanding was that he wanted to protest these other people's property values as well. And the answer to that is no, but certainly you can talk to them, and, if they agree, then certainly that would be an option for them. You certainly can come and take a look at your comparables, though, and if you think one of our comparables is inappropriate, let's talk.
Okay. That wasn't my question, but you're very close to
Okay,
it. Okay, so you pick 5.
yes.
I come in and say, what are those 5?
Mm-hmm.
And I say, well, I'm not comparable to those. My house is 30 years older.
Right.
They have solar panels on their roofs.
Right.
I don't.
Right.
I have big trees. They don't. The last time I looked at an appraisal, which was during a divorce, they said very plainly, it's very hard to find anything like this out there.
Right.
Because mine is one of the first houses out there, and everything else is a lot newer.
Right.
So if we can't protest your model,
Right.
then we really can't get into true values.
So let's talk about a few things here. And I probably should have mentioned this earlier. When we create these models for the sales comparable approach, we use what's called multiple regression analysis. And what we do with that is we have a dependent variable is that sales price. And then using the sales, we develop additional variables or characteristics based on things such as the construction, the quality of construction of your home, the year built, if you have a garage, things like that, and we assign values to each of those. The CAMA, which is Computer Assisted Mass Appraisal, what our system does then is we're looking for properties similar to yours. We're never going to find the exact same property, most likely. And then we are able to account for those differences. So if they have solar panels, which has no value, just so everybody knows, that doesn't actually add value to your property. If they have something like, let's say that their basement is finished and yours isn't, you're going to say, well, gosh, that's not a very good comparable. However, based on the statistical analysis, the rest of all of those characteristics are very much like your house. And then through that modeling process, we're able to make an adjustment for the fact that his basement is finished, yours isn't. So I don't want to get more complicated than I need to, but what we're going to do, if we use his house as a comparable, we're going to take his sales price and we're going to reduce that because your basement's not finished. So basically what we're saying is if his house sold and the basement wasn't finished, what would that sales price have been then? And those are the values that we're looking at. That's a very simplistic way of talking about it, but basically that's really what it boils down to. and then we're accounting for those differences. In the end, again, I don't want to get in the weeds, but we typically arrive at 7 values. We typically have 5 comparable sales. We have 2 other values that we use. We drop the 2 high, we drop the 2 low, we average the 3 remaining to arrive at your assessed value. There's a lot that goes into it.
Add something really quick. When we build a model, we take your property and we adjust every property in your model to your house. And the model chooses the 5 that are closest to your property. And so the model does a really good job of choosing what is closest to your property. And so, of all the properties that sold. So you may be looking at that house and it may not seem comparable to yours, but of all of the properties in the model, they were the most comparable to your property.
And in the end, if we do not have what we would call good comparables, statistically speaking, we can go back and use the cost method as well. That's our backup if we don't believe that the comparative sales approach is giving us an adequate value. The other thing to keep in mind, if you have a fee appraisal on your property that is dated within 6 months before our assessment date, so if you have a fee appraisal dated July 1st, 2021 up through present, bring that to us. That is something that we can take a look at, and we may be able to override our value to meet that fee appraisal. There's very specific dates that we can use, but again, come and talk to us about that. The other option that we have is there's an administrative rule where you can use your sales price. If you purchase this property and it was a valid sale, it was on the open market, it wasn't your brother selling it to you for 30% less than what market would have brought. If you bought this property and it meets the qualifications that we have for a valid sale, neither being under any compulsion, everybody has relevant knowledge to the facts, etc., that's something that we can look at as well. There's steps that we can take to possibly use your sales price. And so there's different methods that we have to work with you. Again, just come in and visit with us. We're happy to look at every option that we have. Okay. Yes?
Where is your office?
We are located in the Wells Fargo building, just around the corner here on 27th Street. We're on the 14th floor. We're the only ones up there, so if you just take that elevator to the top, we're there.
Do you have those forms here?
We do.
I
We-
sent for one and didn't get it.
Oh, no. We do have all the forms, and if we don't have a form, I will make sure that you get it, so you bet.
So Paul, if I heard you right, you said solar panels have no value?
So, let's talk about that a little bit more. It's not that they don't have value. They don't have value for our models, simply because we've looked at this. And what we've determined is that if you look at solar panels, you can look at a 1980s house that has the solar panels up there that are yellow and probably don't do a darn thing other than look terrible. Then we have the new ones that are coming out, but we've got all different sizes. We've got there's different qualities of all of these solar panels. There's no way for mass appraisal for us to pick these up and assign a value to them. We're just, again, in Yellowstone County, we've got 80,000 properties. So we have a number of characteristics that we are using. Solar panels just don't happen to be one of them at this time. That could change.
Sorry, Paul.
No, go ahead.
We have a group statewide that are working on that, but up until this time, we've not been able to prove that they add a value in the sale price. And so if you've got 2 houses, one has solar panels, one does not, we have not been able to show that the one with solar panels would sell for more than the one that does not. And so we are studying that, but currently, we've not been able to put that into a variable and like she said, but it is something we are looking at for the future because they are becoming more popular. But currently we have no way to prove that they increase the value of the
Well,
home.
they generate revenue, you know exactly what the revenue is because we have net metering. So you would charge
assuming we had two comparable houses, and one had a porch roof and one did not have a porch roof, the guy that had the porch roof would get assessed more because he had a porch roof and it'd be an improvement. But yet you'd like us to believe that a solar panel is an improvement and it generates revenue. I just see a dichotomy.
We're working on that and researching how you would interpret that in a value setting. Because then you'd have to be in touch with the rural electric company that is, and find out how much value each one of those is generating. And so there's a lot of other steps in the middle there that
Right.
we have to look at.
It makes it real late if they turn yellow and want you to got banged down.
That's right. All right, anybody else have a question I can answer? Okay, thank you so much for being here.
Paula, thank you for being here.
Thank you, I really appreciate it, yes, thank you.